of those creating a sort of wall of worry for investors today. North Korea is rattling investors not just here in the U.S. but across the world. I mentioned that we're sort of picking up the baton. Let's take a look at the performance of markets today. Major Asian markets closed lower. The losses on the European markets were even worse. Let's go to Alan Nuckman on the floor of the CME Group. He is the chief options strategist at Bullseye Option. And Alan, just talk to me a little bit about sentiment today.
Well, we're opening about half a percent lower, not significant. The market reaction to what's happening here in the States has been muted, the financial reaction anyways. We saw oil break down yesterday as more supply will be held up with refiners being closed. But if you look at the stock action today, let's remember last Tuesday was Turnaround Tuesday, where we got to the halfway point of this sell-off that we've seen over the last couple of weeks. Unable to push through that. We're seeing a bit of profit taking. The markets are drifting lower, but just 0.5% lower right now. And I want to point out, significantly above last Monday's lows in the stock indexes.
Alan, you know, as we move forward, I mean, we do have some fundamentals coming through. It seems like we are in a headline-driven environment right now.
Yeah, it's a chaos president. It's having a minimal impact on the stock market, to be honest with you. We do have these headlines and these market moves, but, you know, you talked about triple digits in the Dow. That doesn't really mean anything anymore. That means a 0.5% move. That's insignificant. That's market movement. The S&P hasn't had a major sell-off here in a good deal of time. So, you know, we've been steady and consistent, and we've been trading. You know, we are at the end of the summer. The markets have less volume right now, so they react a little bit more to some sort of headlines. We had that immediate reaction last night, but as you talked about, if you look at Asia, the Nikkei in Japan was down 0.5%, not a big deal, and actually the Chinese Shanghai was steady to positive. So the market reactions, that's what we have to focus on, not the emotion, have been minimal so far.
Alan, before I leave you, you know, whenever we talk about these natural disasters and the impact on the energy infrastructure, we know so many rigs, so many refineries are based in this area of the Gulf. What kind of time frame are we talking about? We know that's going to push gas prices up. We know oil will go down because of that temporary loss of demand. What sort of event is this? If there's no major damage, are we looking at a week, 2 weeks? How do you factor this in?
There's going to be people that know better than I as far as how long it takes for refiners to come back online. 15% of our refining capacity is in that Gulf, is in that area around Houston. So what's going to happen is some of the refining here in the Midwest, some of that gasoline is going to get shipped down there. So oftentimes it's just temporary. I think what happened yesterday was a tale of two markets. You saw gas go up and crude go down. But really for crude, it was significant because it broke below a technical point at 47. That was a big deal. Also, the biggest deal yesterday that no one's talking about is gold moving above 1,300 and closing above. We're seeing a bit of flight to quality. We see gold, we see bonds, we see the Japanese yen, all at levels that we haven't seen since last October, as we've seen a breakout and some follow-through. So what that means to stocks in the big picture, I don't think is a big deal right now, but I think it's technically a positive with gold moving back above $1,300 an ounce.
All right, Alan, always appreciate your insight. Alan Nuckman for us.
Thank you.
This hour, Donald